daily close back below the neckline of 113,000 approximately, right? So approximately, in fact, it's a little bit like that. It's more like that. So it's right around 113,300. That would be where the head and shoulders would be negated. So again, this is a bullish chart for further upside to as high as about 117,000 to 120,000. All right. But any close back below 113,300, let's say daily close, mind you, then the pattern would fail. Now, pattern failing on this doesn't necessarily mean price goes back to the lows. It just means you can't calculate the target anymore. It's not a valid pattern, which allows for the calculation. All right.
Bitcoin just pulled off something technical traders have been waiting for. It finally closed back above a level that has been giving it trouble for weeks. Gareth Soloway from verifiedinvesting.com explains that this line on the chart used to act as support. When price was above it, it held strong. Once Bitcoin broke below, that same line flipped into resistance and rejected multiple rallies. Now, with a decisive close back over it, the outlook shifts more bullish. Looking closer, Soloway highlights an even more interesting formation on the hourly chart, an inverse head and shoulders. This is one of the most recognizable bullish patterns in technical analysis. You get a left shoulder, a deeper dip forming the head, and then a right shoulder that mirrors the first. Once price breaks above the neckline of that setup, it often signals a stronger move higher. But patterns aren't guarantees. Soloway stresses that for this setup to remain valid, Bitcoin has to keep closing above the neckline. Specifically, if Bitcoin drops back under roughly 113,300 and closes there on the daily chart, the bullish pattern is cancelled. That doesn't mean Bitcoin instantly collapses, just that the upside target is no longer in play. For now, though, the path looks higher. As long as Bitcoin can hold above that neckline, Soloway sees room for upside toward the 117,000 to 120,000 range. Traders are watching closely because this break could be the start of the next leg up in Bitcoin's bull run. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Of Bitcoin here. And what we can see on Bitcoin is this was the key level, right? And very obviously key because as we see, price was established, right? This was your high pivot before this long base of consolidation. And then on the other side, we see how once it broke above, it became support, right? And support. And then look, when it broke, it now became resistance, right? And so that was the first thing that kind of got me cued in that this was a major level. And again, you can see over and over again, rejection off of resistance, rejection, resistance, rejection, resistance. And finally, we've closed back above. And you could almost look at this like a hilltop. On one side of the hill, price goes this way. On the other side, it goes to the downside, right? So which way does the water run essentially down the hill, one side or the other, to the upside or the downside? Now, one of the things that gave me a heads up, and I was talking about this in my daily game plans, and by the way, I'll be doing my daily game plan at 9 a.m. Eastern time this morning on the Verified Investing YouTube, as I always do, and it's a full-fledged 20-plus minute show live where I really go in depth on all charts, inclusive of crypto, stocks, and commodities. But one of the things I was noting the last few days is how this chart was actually starting to show us a bullish sign. Why was it a bullish sign? Well, let's dive into a shorter time frame on this chart. Okay, so we're going to get rid of these arrows and just kind of clean house. And what I want to do is I'm going to go to the hourly chart. Okay, and when we flip over to the hourly chart, what we can start to see is a pattern was forming. And again, basically what we were on the daily chart. So we're now zooming in on the hourly chart. And what this was showing us, folks, is that you had what's called an inverse head and shoulder pattern. Shoulder, head, shoulder. And this is a bullish pattern of basically consolidation or a setup that is, again, signaling further upside. And what we can see is this would be called your neckline. And the neckline of the head and shoulders is basically from armpit to armpit right here. And here's, again, your left shoulder, your head, and your right shoulder. And the key is once it breaks out, you can actually do a measurement to where this target would be, right? So we take our measurement tool and we take the lowest point of the head to the high on the neckline, right to the neckline. And when we break out, that gives us a general target. If this plays out to target, it would be about 119 to 120,000 as our upside target. Interestingly enough, there's this pivot right over here that aligns almost perfectly with it. Now, it's not the absolute all-time high, which was a spike up, spike down, but still that gives us a general synopsis, all right, or level. So again, overall, as long, and this is very important, guys. And again, I stress these important factors because, again, you have to know when you're trading, you have to know where something fails or where it's valid. And I always like to talk about the good, right? Which is the breakout above the neckline of the head and shoulders, the inverse head and shoulders here. But we also have to say, okay, well, where does it fail? Because that gives you your stop out. All right. And when we look at this, we go back to the chart. Any daily close back below the neckline of 113,000 approximately, right? So approximately, in fact, it's a little bit like that. It's more like that. So it's right around 113,300. That would be where the head and shoulders would be negated. So again, this is a bullish chart for further upside to as high as about 117,000 to 120,000. All right. But any close back below 113,300, let's say daily close, mind you, then the pattern would fail. Now, pattern failing on this doesn't necessarily mean price goes back to the lows. It just means you can't calculate the target anymore. It's not a valid pattern, which allows for the calculation. All right.
Ethereum is at a crossroads, and Gareth Soloway says traders should treat the current setup as a caution zone rather than a full-blown breakdown. ETH recently slipped under a key trend line, which naturally raises concern, but Soloway points out that technical damage isn't confirmed until the market delivers a daily close below roughly 4240. If that happens, it would confirm a bearish shift and open the door to a deeper pullback, with the next downside target in the 3875 to 3900 range. Until then, it's a yellow light, not a red one. On the flip side, Ethereum still has room to reclaim strength. If it can push back above 4,500 and stay there, the bullish momentum could kick in again, likely fueling another attempt at the 5,000 mark. That makes the coming sessions important for traders who want to gauge whether ETH is regaining control or setting up for a more extended correction. Meanwhile, Solana is showing a cleaner, more bullish short-term picture. After closing above a resistance level, the path looks clearer for further upside. The first major resistance sits at 244 to 245, and Soloway believes SOL could test that area fairly quickly if buyers keep pressing. Compared to Ethereum's caution flag, Solana looks stronger for near-term momentum. Let's get back to the interview.
ETH is still in warning zone. It's kind of a yellow light here. Now, again, you might say, well, why is it yellow? Why isn't it green? Why isn't it red? And the answer is very simple. Trend line here, we broke below, but we never confirmed the breakdown. And I've been saying this for days and days and days, is that unless you get basically a close below, 4240, then there's no confirmation that it's a real breakdown. And so far, that's been the dead-on call because, look, it's been creeping up. Now, it's still below the yellow line, the white line here. But again, if it recaptures, it likely goes back to its high here and back to 5,000. As long as it stays below, it could confirm, but it has not. And so this would be a gray area, or as I like to call it, kind of a yellow light, which is just a warning light, right? It's like pay attention, right? It's not a stoplight like red, and it's not a green light like go, but it's a yellow kind of cautionary signal here. And so we have to watch on this. Can it recapture 4,500 on a daily closing basis? If it does, I think it goes to 5,000. If it doesn't, we just want to monitor to see if we ever get a close below 4240, and then it would break lower. And then you'd expect a move down. Next target, by the way, would be about 3,900 and change, I would say. 3,875, somewhere right in this range, would be your downside target on ETH. All right. Now, quickly, just looking at Solana here. Let's take a look at Solana real quick. Solana is breaching this little resistance line. We see a close yesterday above it. I'm actually looking for a potential bigger move on Solana here to the upside. First resistance I have would be a little bit of a pivot point right in here. It would be around 244 to 245. I do think it could get there within a few days based on some momentum in crypto. All right. And then, of course, you guys love looking at XRP. And of course, XRP, I did a video on this. I believe it was I think it was about 4 days ago. It might have been this last weekend on my channel here on YouTube. And basically, we talked about a possible breakout right here. This was on this day. I did the video on this day because I saw this little breakout. And this is actually a bullish sign. As long as you don't trade back below this zone, basically back below 275, this is a breakout. And you would expect this to continue to rise. There'll be a little bit of resistance around 312. You can see this pivot low to this pivot high here. But really, I wouldn't be shocked if we go all the way back to 330 to 335. right up here. Now, again, as we always do, we have to look at both sides. A good technician is looking at the upside, but also the downside. Where does the pattern fail? Any close below 275 would fail that pattern. Now,
markets are shifting fast after the latest round of U.S. economic data. Traders now price in nearly a 90% chance of a September rate cut, with expectations for further easing stretching all the way into early 2026. That shift in policy outlook is fueling appetite for risk assets, and crypto is front and center. ETF flows tell the story. On September 10th, spot Bitcoin funds saw $757 million in net inflows, while Ether ETFs pulled in another $172 million, according to Blockhead. Analysts point out that this isn't just retail enthusiasm. Large institutions are clearly stepping back into the market. When you combine that with a softer Fed stance, the setup for digital assets looks increasingly favorable. Attention now turns to the upcoming FOMC meeting. Goldman Sachs and other heavyweight firms expect Jerome Powell to restart the easing cycle. If history is any guide, that kind of pivot tends to provide a strong tailwind for Bitcoin and its peers. With liquidity conditions loosening and institutional demand returning, the stage may be set for crypto's next leg higher. The only question left is how quickly the momentum can build once the Fed makes its move, so stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support and I hope you enjoy the video.